In this video, we're going to be talking about purge and revert again. So I made a video on this not that long ago, and the feedback that I got from the video, or a lot of you guys like that particular strategy. It fits you, if it your personality, and you really took a liking to that strategy that I posted. Okay, and for any of you that don't know, or you didn't see that video, I'll leave a link to that in the video description. So after you watch this video, go watch that one as well. So I have a couple strategies that I trade. Okay. I'm not really using this one that much at the moment, but I may do it again in the future. I'm really focused on owning another particular strategy at the moment, which most of you know what that is. But this is a strategy that I absolutely love. It's so straightforward. There's not a lot of moving parts to it. It's just extremely simple, yet so effective. Okay, so we're going to be bringing up it's called Purge and Revert. This strategy is called Purge and Revert. Okay, so we're going to use ICT as an example. So I saw this set up the other day, and it's just a beautiful, beautiful, beautiful example. Okay, so ICT. So what does that even mean? What does Purge and Revert mean? Well, Purge is when step number one, you want to see it purge liquidity. When I say liquidity, what do I mean? Well, put simply, an old high or an old low. Okay, so you want to see price purge an old high or an old low. So for example, right here, we have an old high. We have an intermediate term swing high right here. See this? What is resting above a swing high level like that? Buy stops, buy side liquidity. So shorts that are trailing this thing lower, that are looking for this thing to come down and take out this low right here. They're looking for that continuation. And what happens? Price reverses out of nowhere. It just reverses, right? It comes up and it tags those buy stops out of the marketplace. Okay. And this ties into, because you guys may have seen me say so many times on Twitter, wait for liquidity or you'll be the liquidity. Wait for liquidity or you will be the liquidity. So with purge and revert, you're waiting for that liquidity to get purged. That's step number one. You want to see sell stops, or in this case, buy stops, get taken out of the marketplace. That's step number one. Okay. Step number two is we need to go to our lower time frame after it purges that level. Okay. So for example, let's go to the 1 hour. So now we're on a 1 hour chart, and you can see we have that horizontal blue line, which is that higher time frame swing point. Now it's displayed on the intraday chart. You can see price came up. It was operating within a bullish market structure on the lower time frame. See how it was just consistently grinding higher, grinding higher, grinding higher, grinding higher, grinding higher. It comes up, it takes that liquidity. And what happens shortly after taking that liquidity? Boom, you get a nice, big, explosive move to the downside. A displacement lower, a shift in market structure lower, after taking that liquidity. Purge, it purged that liquidity. And step number two is it's going to revert in the opposing direction to look for sell side liquidity. Step number one, again, it purges buy side, and then you get the displacement where it reverts to sell side. Okay, so it reverted to sell side right here after taking that buy side. Okay. That is a shift in market structure. Now, another thing we want to do is we want to find the most dynamic price range prior to that move higher. So you see this big price range right here on the daily chart? What we're going to do is we're going to take the low of that price range to the high of that price range, to the high of that purge. And what you're going to do is you're going to find 50% equilibrium of that price range. Why do we do this? Well, that is the equilibrium. It separates premium from discount. Above it, premium, below it, discount. And if we're shorting this, because this is a bearish scenario, we purge buy side, we're looking for shorts. Anything above 50% equilibrium of that price range is good for a short. Anything below it, you no longer have high probability shorting plays, because now it's in a discount marketplace. It's cheap. Discount means cheap. Premium means expensive. Anything above 50% is in a premium. It's expensive, right? So we mark that off. Next, what we're going to do is we're going to mark off the last 3 days prior to the purge. All right. So the day of the purge, that's day number 1. So we're going to mark midnight New York, we're going to put a day divider in. That is day number 1, because the day that the purge happens, that's the first day you're going to mark. Okay, you're going to put your day divider in. Okay, and then you have a look back period of 3 days when you're doing purge and revert. So that's day number 1, the day of the purge. Then you're going to go back. You're going to put a day divider for that one and that one. These are the key liquidity pools that you want to target. Okay, those are the key liquidity pools, because underneath each of these lows, what's resting underneath of each of these lows? Sell side liquidity. Tuesday's lows right here, there are sell stops resting beneath that level. That is a key liquidity pool. Okay, so price, that could be a PT for you very possibly. You're looking for price to revert to take out these sell stops. Or maybe you could be more aggressive, see it take out this low. You want to see it revert to take out these sell stops. That's still in a premium marketplace within that price range. See that? So again, to go over the steps real quickly here, just to make sure nobody's lost. Step number 1, you want to see price purge a key liquidity pool. Okay, an old high or an old low. In this case, we have an old high. Price purge that buy side liquidity pool. Okay, and it's also important, you want to mark equilibrium of that price range prior to the purge. You want to find the key price range, the most dynamic price range prior to the purge. You want to find 50% equilibrium on that price range, because anything above it, premium, anything below it, discount. You don't want to be shorting anything in a discount marketplace. That's key as well. Very, very, very important that you mark the equilibrium price point of that price range. Okay, then once you have the purge and you got your setup, you got the displacement, you want to have a look back period of 3 days. Okay, the day of the purge is day number 1 right there, and then you got day number 2, day number 3. These are key liquidity pools that you want to target. Okay, so what about the entry? So after we get the purge of that level, what about for an entry? So you want to see a displacement. That's next. Okay, because you want to see confirmation. You don't want to just, I mean, you can, but the smartest play, so you can just short it up into that level if that's your thing and you're successful doing it. The smartest play is to wait for confirmation, to wait for price to show its hand. Okay, what does that look like? What is price showing its hand? That is price showing its hand. See that? That was a very strong displacement lower, creating a fair value gap. That's next. So this strategy, it ties in very nicely with ICT's 2022 mentorship. I want you to think back to that. Most of you that follow me, you've probably watched that series. And you can look at even my own trading. I've gotten a lot of influence from that. This is like, it's the same thing basically. Okay, it's basically the same thing. I want you to compare what you learned in ICT's 2022 mentorship to Purge and Revert. So basically it's the same thing, but now we're dealing with a higher time frame here. So NCD/USD, it came up and it took out a higher time frame liquidity pool. What do we want to see next after it takes out that liquidity pool? We want to see the displacement lower. Because in this case, remember, we're shorting. It'll just be the opposite for buying scenarios. It takes that liquidity and you get a displacement lower, a shift in market structure. It cracks that swing low level, okay? That is a shift in market structure. That is a high probability shift in market structure, okay? So that's next. After the purge, you want to see a displacement lower. That is your confirmation. You want to see it create a fair value gap, okay? So for any of you guys that don't know what like all this stuff means, because I know I probably lost some of you along the way because all these concepts is just overwhelming. There's just too many things. Like what's premium and discount, what's fair value gap, what's buy side liquidity, like your head's spinning, right? So I'm going to leave several videos in the description that I want you to watch after this video. Okay, I'm going to have a video in the description titled How to Find Fair Value Gaps. That's what this is. That's your confirmation signal. I'm going to leave a video on key liquidity pools, and I'm going to link a video on premium and discount pricing, understanding that. And I'm going to leave a video of ICTs 2000. I'm going to leave that entire series in the video description. ICT's 2022 mentorship. It's going to be linked in the video description, which, you know, very similar to this particular strategy, or it has a lot of similarities. And I'm also going to leave a video. I'm going to leave his original Purge and Revert video, ICT's Purge and Revert video, in the video description as well. So you're going to have plenty of resources, okay? So basically, leaving off where we left off was we want to see a shift in market structure. So after you purge that liquidity, you want to see a very strong shift in market structure, leaving fair value gap confirmation. We got fair value gap confirmation right there. Okay. So do we want to be shorting as it's selling off like this? No, if we want a smart entry, we want to get it in a discount marketplace. Okay. Or we want to get it in a premium marketplace, the best entry. So we could take the high prior to the purge to the low, see how price on that move higher. If you were patient, you waited for it, price moved higher up within that price range, that displacement range, above 50% equilibrium. So it traded into a premium marketplace within that price range. That's your entry in a premium marketplace in that fair value gap. Okay, where would your stop be? Best place for a stop is going to be above the high. You could do the fair value gap high as well if you want, but really the best place is going to be the high of that liquidity purge. It's above the fair value gap and it's above the liquidity purge. Best place to keep a stop. Okay, again, entry is going to be in a premium within that displacement range. And what's profit target going to be? Well, profit target is going to vary because we have different styles. Some people like to take partials along the way. Some people like to take everything at one place. So it's going to vary. But when you're taking profits, it's going to be at key liquidity pools. That's the takeaway. Because remember, purge and revert. You see it purge and then you want to see it revert to opposing liquidity. Okay, so where are those key liquidity pools? Well, you have these lows right here, these lows right here. There's sell stops resting underneath these lows. Sell stops right here. Or if you're really ballsy, if you really got, a pair of cojones, you could hold for down into a discount marketplace. So below 50% equilibrium. And look for a key liquidity pool down here. You'd be milking off some, excellent, out of this world risk reward if you did it. And again, you could pay yourself along the way. Maybe take some profits right here, take some profits right here, and then hold for that full move. That's something you could do. Just look at that. Look at how beautiful that risk reward is on that. So let's just see what that would be. Say you got short right there, say at that 60 level, right? So you got short at that 60 level. And all right, so we're risking that high. And let's just say you targeted previous day's lows. That is just shy of 2 to 1. That's awesome risk reward. Let's say you want to target these lows right here. So, at the beginning of the week, which is still a very reasonable PT. It's a very good PT, low hanging fruit PT. That's over 2 to 1 risk reward if you were to do that. Let's say if you're really ballsy, you had the cojones and you want to hold all the way down into a discount. Now we're looking at in the 5 to 1 range. 5 to 1 range. Think about that. You could be right. What is that? I'm not a mathematician. I suck at math, but that's like you could be right 20% of the time and be profitable with a 5 to 1. And that is well within the market structure. Another big mistake that beginners make is they try to force their risk reward ratio on the chart. They want to trade high risk reward ratio plays, but they'll force their risk reward ratio on the chart and not play the market structure. This is 5 to 1 and it's within the market structure. That is within that current market structure because you're holding down into a discount within that price range. It's very overbought. It purged a major liquidity pool. That is fantastic risk reward, but it's also aligned with the market structure. So it's a very good PT. That's how you do it. And that's how you milk off these just fantastic risk reward plays. That's how you milk it off. So one last time. Step number 1, you want to see a key liquidity pool get purged. We saw it get purged right there. Okay. Then you want to see a displacement. You want to see a reaction off of that level. You get that reaction, a shift in market structure. You want to see a shift in market structure. There it is. For your entry, you want to see price trade back up into a premium marketplace within that displacement. So it does it right here on that spike up right there. So it traded up below. See how it traded up above 50% equilibrium? You could have got a short entry in there, risking either that high or that high, up to you, how aggressive or how you want to do it, how tight you want to have it. And profit target, tagging these lows, or if you're really ballsy, you could hold down into a discount. Look back period of 3 days, key liquidity pools you want to target in there. And yep, that's how you do it. Just a beautiful, like I said, just a beautiful strategy. So stupidly simple. Like anybody can trade this strategy. It's just so simple. There's not a lot to it, but it's so effective. Even if you're, and it's not just on higher time frame either. I'm using a higher time frame chart, and I prefer higher time frame charts. It's just so much cleaner. But you do got to be more patient because the setups don't happen as much. But this happens on, because price is fractal. This setup, it occurs on lower time frame as well. So like, say for example, you could use like a 1 hour chart for your higher time frame chart. If you're like a scalper or a day trader, you could look for these 1 hour key liquidity pulls to get purged, and then use like, say, a 5 minute, for example, and do it that way. It's the same exact process on a smaller time frame chart. It's just, it can be a little bit noisier. It's a lot cleaner on a higher time frame. That's why I like higher time frame charts. It's just so much cleaner, so much easier to read, so much more laid back. But yeah, that's the strategy. So again, there's going to be several videos linked in the description. ICT's videos, his 2022 mentorship, his Purge and Revert video that he made a while back. I'm going to leave one of my most recent Purge and Revert videos that I made in the video description. There's going to be several resources down below. So make sure you watch all of them. And yep, if you enjoyed, leave a like, subscribe to the channel. I'll catch you later.